Hello traders, welcome to the LFB and our global video charting review for the 1st of February 2011. This is our currency review courtesy of the automated trading program run from the LFB trade desk. We would draw your attention to the disclaimer that's posted on the video homepage and ask that you read that and accept before we proceed. Currency markets are once again in the trading patterns that house most of the day's momentum and price action in one or two 30-minute periods of trade. The dollar index looks weak and is completing the short signal from Tuesday trade that broke 78 that targets 77.30 on the dollar index. It is questionable whether regional central banks will allow the Federal Reserve to continue its weak dollar policy in the face of the administration's long dollar public policy. The euro completed the long signal from 36.50 that was issued on Monday to ATP clients, having hit the 37.50 price point area again overnight. A new signal will not be formed until a reversal to support at 37.25 is seen to hold, consolidate and break long during the course of this week. It would be unwise to try to buy the euro with a break above 37.90 without first seeing a pullback to support. The British pound continues its bullish moves, albeit contained within sporadic price action points during the course of any given session that seem to contain 2 or 3 30-minute price point bursts that then consolidate heavy. The long signal issued on Monday from 58.50 has completed its target cycle by hitting 1.6000. A new long signal on the pound will not be seen until a recycle to support happens and 1.60235 is tested as a support price point. Like euro, the pound looks to need to run through a cycle that tests support before another sustainable long break could be made, although this is the one pair out of them all that would make a break on its own and be able to hold on any given regional trading session. The Australian dollar caught bids in trade on Tuesday as a consequence of the Reserve Bank of Australia's interest rate statement, which broke the pair above parity at $1. But again, the same as pound, it may be unwise for traders to buy Aussie above the current price points around this 1.0050 without first seeing a pullback to support that holds and then cycles higher. This is a very important week for Australian red flag economics, and every day holds potentially huge price action moves as a consequence of each day's red flag releases. Bank early and bank often on the Australian dollar-based trades in the near term. The Canadian dollar is showing short price action on the near-term charts, but giving long momentum reads on all time frames still. And that divergence between price action and momentum should set alarm bells for those traders looking for sustainable movement on the dollar CAD pair. We're still getting long momentum reads even though price action is trying to push lower. When you look at the larger time frame charts, dollar CAD is stuck in a very tight trading range. The Japanese yen continues to dominate the US dollar with a sell signal on dollar yen from 82 now completing its cycle at the 81.50 price point on Tuesday. It would seem unlikely that the US dollar could lose too much more ground against the Japanese yen without seeing a retest of the 82.50 area, which has been incredibly important during the last 3 or 4 months of trade and now houses the 20 and the 100-day simple moving average. The Swiss franc finally broke lower to test support in the previous session, although it couldn't hold that test, and did seem to be the catalyst for surging momentum across all major pairs. In the Sunday video, we did point out that the Swiss franc was holding the other major pairs back. The Swiss franc, like the Japanese yen, is linked to the global interest rate markets, and these were just warnings that you shouldn't have been too quick to try and jump on those major pairs. But as soon as the Swiss franc was able to break, those pairs were set free against the dollar. Without dollar Swiss moving or able to break near-term price points easily, history tells us that the major pairs will not easily hold sustainable breaks against the dollar. Although still in a sideways channel that has support at 93.50 and resistance at 94.50, the Swiss franc continues to dominate the dollar in the near term. Traders would be well advised to continue to monitor the Swiss franc because without this pair breaking near-term ranges, most of the major pairs have no choice but to retest recent breakout points on the dollar before the next leg of sustainable moves can form. Can't be underestimated the power of the red flag economics coming out this week, including ADP, private employment out of the US, including interest rate decisions from the UK and the ECB. And remember what that ECB rate statement did to the euro 3 or 4 weeks ago, and also the infamous non-farm payroll out of the US and out of Canada on Friday.